Good afternoon, everyone. It's Peter D with Bear Bull Traders.
Appreciate you guys spending some time here after the markets. So, as you can see, it's a picture of me. You've got the video there as well in the room that you can see over top of it. Um, this is really, so there's two things I wanted to cover. So we're going to talk about just setup. So this is the mechanical, technical setup of what your desktop configuration could look like. I'm really just going to share mine. There's lots of different configurations. It just gives you an idea of how I set it up, because mine looks very different than Andrew's. I actually started with Andrew's, and I changed. I sort of adapted it for what made sense for me over the last couple of years, and ended up at this point where I've got a desktop that looks a very different way. So I want to share that with you. And then we're going to talk about the psychology of trading, because I think that's probably one of, well, it is the most important aspect of trading and the thing that's the toughest to master. So I will say that here I'm very proud to be part of Bear Bull Traders, and it's a great community to be part of. Before I get going with any of the information, I've got to do the disclaimer. So just to remind everybody that I am not here to provide any advice on tax, investing, or legal matters. Really, it's just the opinions expressed are mine alone, and do not necessarily reflect those of Bear Bull Traders. And this is for information purposes only. So, with all that out of the way, let's talk about the environment. So when you look at trading, there's a few things that you need to get set up, right? You need a platform that you're going to use. You need tools that you're going to operate off of, including your desktop device, your emergency backup systems, all that stuff that we'll talk about a little bit. You also have to understand how to perform technical analysis. I think it's a good thing to know the basics of fundamental analysis, understand how it works, even if you choose never to use it. In day trading, generally you're not using a lot of fundamental analysis. And in fact, we talked about that earlier today in the room, that it can even get in the way of your ability to do dispassionate technical analysis. You need a strategy that's personal to you in terms of how you're going to run your day trading activities. What rules are you going to follow, and how are you going to know if you're doing well or not? And then, of course, you need a risk management strategy. Overlaying all of that is, of course, your personal psychology. And as I mentioned, today we're just going to talk about the three elements: the platform and tools, and then your psychology. There's all those other things that are important, but we won't be addressing here today. But if you've got questions, feel free to ask them, and I'm happy to address them as we can. Okay? So just to get started, I'm giving you, this is an image of my desktop if you take a step back. So I've got a standing desk that I use. You can see I've got a relatively messy desk, but with lots of things going on. So I run a desktop tower that sits down here underneath my desk. I run three 27-inch monitors that are connected to that workstation, and then I run a separate laptop. So those are the devices that I use. I use the laptop really to do two things. One, I use it to run my spreadsheet that talks about my trade size, and I use that spreadsheet to determine what an appropriate trade size is on every single trade. And then I run FinViz. I basically run the news feed, right, that I use to get news when I want to look up a stock or see what's going on. Second, I then have a paper sheet that I use every single day, and I can even show you, like, here's my sheet for today, right? I mean, there wasn't a lot going on. You see, I don't have many. I only have one stock, in fact, that I had news on, and that was COL, which I didn't even trade, which is the Rockwell Collins. But every day I've got a sheet that I create with information about the stocks in play and the news. Whether it's earnings or whether it's a buyout, I've found that I tend to forget those things. I look it up in the morning and then I forget it 10 minutes later and I have to look it up again. So to avoid that, I tend to remember things best by writing them down. So I write them down. It tends to stick in my memory. If I ever need it, I've got a quick reference. Now I'll show you in the camera here, I developed systems over time that I use to assess things, and we'll see if this works. Because one of the things you can see back here is that I actually have, so I've been doing this for 2 years, I've got 600 pieces of paper back here in this pile, where I've got basically a trading sheet for every day that I've been live in the markets. And I keep them all. So if I show you here, hopefully you can see that in the camera a little bit. This would have been mine for Monday, right? I've got all the stocks in play. I've got just brief notes about what was in play about them. I don't expect you to read it, but what's important is I've got a color coding system where I do a couple of things. One, I put whether the news is positive or negative. So a green highlight means it's positive, a red circle means it's negative. And then I indicate whether it's a low float stock or a very low float. For me, the definition is a low float, anything that's around 20 to 50 million shares in float. Anything below 20 million is a very low float. Those are warning flags to me because I don't tend to apply I don't tend to trade those, but I like to know they're out there. And I also, you don't see it on this sheet, but I also indicate on many of the sheets whether it's a NASDAQ, let's see right here, I put a little N if it's a New York Stock Exchange traded stock, or if it's a sorry, a NASDAQ, I just don't put anything. So it just helps me understand what market is it trading in, what's the relative float size, and what was the news. Now, the other thing that you'll notice on my desktop is that I've recently started adding tabs. So I only follow, so on my screen you can see I have the ability to follow basically 5 stocks fully and very actively. So I will position my top 5 stocks in play that I think I want to trade in these 5 setups. So, and I'll talk about those setups in a minute, but I've got basically 1, 2, 3, 4, and then 5, right? So these are sort of my 5 setups on my screen, and all the rest here, these are all just tracking stocks charts, and I'll talk about those in a second. But I've started putting tabs at the top of my monitor that reflect the information that goes on the sheet. So if I'm trading Apple and Apple had negative news, I put a little tab up here that says Apple, it's negative, and it's what it is. I could pull it right off my monitor and show it to you here. Again, I don't know if you, I can't really read this in the camera, but I don't know if you guys can. But anyways, it says Apple on it. And I find it just helps me. Again, it's one of those things that just gives me a more immediate reference. And sometimes I flip between different stocks because people always mention things, right? They mention, oh, you're like, I'm following this and I'm following that. And it may not be stuff that I was actively looking at. And if it's not, I may want to take a peek at it, but I've got to get back to the thing that I'm primarily following, because I've learned if you don't keep following the same things, you just end up being bounced all over the place. And that's how I was getting chopped up. And I ended up losing money because I take trades on stocks that I wasn't familiar with for the day. So I'm using the tabs just to orient myself and make sure I sort of level set. Now, there's a risk in the tabs that, you know, again, if it's Apple and it had negative news today, for example, which is the case of what this tab was that you can see on the screen, the stock may go up for the day. And if it goes up, I have to be careful not to be unduly biased by my tab and say, oh, well, it's got to be negative, so I'm going to short it, even if the technical evidence says the stock is going up over the course of the day. So, you know, I'm aware of that, but I just use it as an orientation. All right, the other thing I have up on my desktop is the chat room. We're all familiar with that, so you can see the chat room that goes here where we talk with everybody. And I always keep close at hand my phone. Now, this just happens to be my house phone that's sitting here, but I usually have my iPhone sitting right there as well, right beside me, because it is an important part of my trading plan. And in fact, on yesterday, when we were going to do this session initially, I had to use my DR plan, right? I had to log into the chat room on my phone if I had been in a trade. So my DR plan is a 3-fold plan. So this is my primary desktop trading station. If it goes down or if it fails for any reason, I then will default to my laptop. If I have an internet failure where that takes this and this out, then my iPhone is what I will use to make the trade. If I can't get access to the platform on the phone, then I will call using either the landline or my iPhone. So, you know, all of these methods are ways I just make sure that I don't ever want to get stuck in a trade. I've got a lot of backup, a lot of emergency failover. You can't actually see in this picture, but I've got I built into my house when I made the house an actual sort of UPS backup system, so I've got fault isolated plugs that allow me a little bit extra time if I ever have a power outage. I'm on a pretty stable grid, so it's not an issue. I've got redundancy built into my internet connection as well, so I've got all of that stuff that just helps me with a backup. And something that's mentioned in the room. Yeah, those aren't Andrew's books. Those are actually some. Anyways, it's a series. It just happened to be the right size. But yeah, you can see I sort of, when you set things up that are temporary and then they become permanent. This was it. This was meant to be a temporary setup, and now I've been using it for a year. So, anyways, it is what happens. So that's my desktop. Now, before I get to the psychology, let me show you the desktop live. So I'm going to flip between my 3 monitors so you can see in more detail what I'm talking about. So this is what the setup looks like when I'm actively trading and I'm not acting as a moderator sharing my screen, because I have to change my setup a little bit to make sure I'm sharing all of the tools and that in the room. So what I'll do is I'll just bring things back over so you can see how they're set up when they're naturally set up. But so as I said, I've got 5 setups that I use. And I've got a couple of market lists of stocks that I follow. So let's start. I'm going to work my way from left to right. Starting over at the left here, this is my main market list. So behind it, I've got nested another one that has all of the market indices that I follow. So I've got the composite index, the SPY, the Qs. I've got TVIX. You can see them all here, right? So these are the indices that I may want to just understand where they're at and what they're doing on any given day, and I flip between them. And then I also have a list of stocks that I follow every day. So up top here, I'll start this part of the list right, whoops, sorry, let me redraw that. This part of the list right here are mostly technology stocks that I follow every day. So I've got Apple, Amazon, eBay, Facebook, Google. You can sort of read down the list, right? I got a bunch that I want to follow every day just to be aware they're at. Some of them, like Apple, I use because the market tends to follow Apple. Right, so where Apple goes, the market will follow, especially in the last couple of weeks, I noticed. So when, sometimes I want to look at Apple, not because I'm trading it, because I want to understand what it might be doing to influence other stocks. Teslas can always be fun because it bounces up and down a lot, etc. So each one has got its own personality, and I've gotten to know these fairly well. Right below it, I put things that I've been following for the last week or 2 weeks that I usually just want to keep an eye on. So in the last couple of weeks, it's been a great time to be following UGAS and DGAS, so the gas and oil markers. GE, JD, and Boeing have also been sort of slower movers in the market, so I've just kept those there to keep an eye on it. Right below that, then, this area here is where I keep the stuff I'm watching for the day. So I change this every single day, and I put in the stock. So today, the list is fairly small. I was only following COL, the UTX. So UTX was buying COL, so they were related stocks. And then OSTK came up through the gappers list, so I was watching that. PBR and BP were ones that Carlos had mentioned this morning, but I don't particularly trade them, but I kept them on just in case something exciting happened. And then TVX was also mentioned, so I just threw it on my list as well. Last but not least, on this down at the bottom, I've got Tilray and CGC. I normally have like ACB, sorry, and then NBEV, things like that. These are just the pot stocks that, because they've been moving, I sort of kept them just at the bottom of my list. They haven't done much in the last few days, but I had them there as well. Now, because I'm out of real estate, you notice there's a lot of stuff that's overlapped. Behind it, I've got some other lists. I've got a list of all of the Chinese internet stocks. So these are the Chinese internet stocks I may have interest in. So I just keep that list back there. And by the way, all these lists are linked to this first montage setup. I also have hidden back here another list of pot stocks that I found over time that I may just want to look and see what they're doing. So again, that's hidden back there. But I don't, actively use them. It's just if, it's a slow and I'm going to flip to something, I will go and take a look at that. Down at the bottom of this screen, I keep the information on my daily trade. So you can see here, these are my trades, some of my trades for today and the volumes, right? That's listed here. So these are my trades. I've got here, this would be any open orders, goes into this window. This window here would be any, so this is unexecuted orders, by the way. This would be any open positions I'd have in this window. And then you notice over here, this is my closed positions in P&L, and it's minimized, as well as my account balance, right? These things are minimized. I can't see them. And I don't, in fact, to this point today, I haven't even opened them. So I don't usually look at that till the end of the day or as late as possible, because I do not want to be distracted by my P&L on any given day. So I mentioned my 5 setups, so I'll talk quickly about that. My 5 setups here, what I consider a setup are 4 windows. It consists of a montage window, a time and sales window, a 1-minute chart, and a 5-minute chart. Now the 5-minute chart, I tend to flip between a 5 and 15-minute chart as well as a daily chart. So I can do that either through hotkeys. So I've got them set up here where it can very quickly jump between the 5, the 15, and the daily. 2-minute if I want, 1 minute, it's all set here, or I can use the buttons. Either way, that allows me to quickly flip through different time frames. Personally, I tend to keep the 1 minute up here at all times, although, you know, I'm starting to think I'm trading too short term, and I should actually move this maybe at minimum to a 2-minute, or better yet, maybe even a 5-minute chart, but right now I use it as a 1 minute. And I have that exact same setup, as I said, sort of 5 times across my screens. You'll notice here that in my montage, I've got my keys that I use to either go long or go short. So the way I've got it set up is it does not do an automatic size. So if I call up the definition of the button, when I click the buy button, it just says buy at the ask plus 5 cents, or I'm willing to go 5 cents above the whatever the ask price is, and send the order. It's a very simple script. It means that I have to manually make sure that I've got the right market defined, right, the right path or route. I've got the right share size, etc. So you know, it's all up to me to set that, because I want to be thinking about it and making sure I'm putting that in. So Aaron's asking a question, where's my open position? Well, I don't have an open position right now because I've closed everything out, but if I did have an open position, it would appear down here. It would appear in this window. So if I look at that for you, sorry, I take the headers off of things, but let me just, oops, don't want to do that. So this is my positions window. Add the title bar back, and it would list any open positions that I have. So I do look at open positions, and you notice I do have my unrealized P&L, my realized P&L. I have that if I've got a position open, but as soon as I close the position, it moves off the screen, and I don't watch that anymore. Okay, so that's my first screen. Oh, the last thing, sorry, on this screen is I've got these 3 tracking stocks, right? And these I usually leave on 2-minute because I'm really using it to get an indication as to the direction of certain stocks. So I'll just put things in there that I want to watch. So today I had it set on Tilray, CGC, and Facebook. Because I wasn't using them in my active setups here, I just wanted to keep an eye on them and see if they did anything interesting. So it just gives me a way to see if they're moving. If they do, I might pull them up on the main screen. Like I mentioned, I've got those tabs at the top that reminds me of that main screen. I can flip back, or I can flip back using, you know, just by clicking on anything here to get between the different stocks. So for me, it's a way I've worked to be able to look at a lot of stuff really quickly without a ton of real estate. So I'm going to go to my second screen and show that to you. So this is my middle screen, middle monitor you're seeing now. Everybody can see that, I hope. And on the middle monitor, I've got my 3 setups, and then I have another market window where I can look at other stocks. Here, once again, I've got things that I keep standard all the time that I watch. Here it's mostly semiconductors, so it's just a list of semiconductor stocks. And again, I've got the pot stocks at the bottom, and this would be my daily list of things that I'm watching. So again, I divide my lists up that way. It's a consistent way that I know where things are. I know how to flip between them, and this will be linked to this middle montage setup. So I tend to keep the other ones stagnant on different stocks. And what's interesting is the first screen I showed you, I mostly use tech stocks. So that'll be the New York Stock Exchange stuff. It'll be maybe the larger stocks like Apple and Tesla and that. Whereas on this screen, I tend to do the semiconductors and the stuff that moves more, SQ, JD. I don't know why, but mentally that's just the way it's evolved. And it actually helps me because I trade slightly differently off my middle screen than I do off of the left-hand screen that I showed you. Because the left-hand screen, I wait for longer setups. I'm used to taking more trend plays, whereas I will scalp more actively on the stuff that I've listed here because they tend to move in ways that lend more towards scalping. But that, again, it's just interesting for me that it's evolved that way. It wasn't purposely how I set it up, but it's just what happened. That's Aaron. You know, if you've got a trick how I don't have to have all those montages set up, that's great. I like the montages because it allows me to, if I have multiple positions, I can, you know, I sort of have. I'm not worried about having to flip. Am I on the right stock before I execute a trade? You know, it's sort of set up automatically for me like that. But hey, I'm happy to learn something new if there's a trick in that. Okay, so my third monitor, you're going to have because that's what I have on the screen. I'm just going to not show it for a second so that you can look at the other things. I've got lots of stuff around the outside of this one. So here's what I typically look at. So this is the active list for the day, right? The gainers and losers from the New York Stock Exchange and the NASDAQ. I've got, because I watch semiconductors a lot, I always have a chart of MU and NVIDIA, although sometimes I will change these, but they're always semiconductors. Maybe I'll put AMD here, or I might put Intel, but they're almost always semiconductors that I just keep here so I can keep an eye on it, because if on the other screen I've moved other things, I can just always see what they're doing. Up top, these three charts are always my market chart. So I've got the Qs up here now, SPY in 1 minute, and SPY in 5 minutes. So, you know, that just gives me the direction of the market, especially in the last little while where the market has been really sort of trending heavily, right, with the SPY. And then last but not least, here's the only two windows I tend to look at during the day from the Trade Ideas scanners. And that's the turbo breakup and the turbo breakdown. And I just keep it here so I can see what flashes up. I can quickly call them up into another screen. Last but not least, I always keep an eye on just how my performance is doing, right? What my network delay. So this is my quote. That's the quote server, and this is the order server here. So it just gives me an idea of what the performance is. I keep it up there because I had some problems earlier, and it makes me, you know, makes me comfortable knowing that it's up there. All right. So that's it on the platform, unless there's any other questions that I can answer on that. And if you think of them later, feel free to throw them out. I'm happy to come back and answer that. But let's talk about trading psychology then for a bit. So in trading psychology, I think it's by far the most important thing, right? We tend to spend a lot of time focused on, do I understand the analysis? Do I have a strategy? What's my risk mitigation plan? Like, all of that is very important. But when it comes down to successfully executing your trades, I personally believe that 80% of the successful trading is managing your psychology, and 20% is all of this other stuff. It far, far outweighs the end result that you're going to receive. Is, you know, how are you maturely managing your psychology? Are you in the right mind frame to really execute consistent, profitable trades? So, and that's tough to do, because if you look at the markets, right, there is all sorts of news out there. Like, I know when I started day trading, and I still do it, right, you go find the news. What's out there? What's happening? You know, what's good or not? Should I even do this day trading thing? And there's, you know, and you get so many people that are, you know, will give you positive stories and people that give you negative stories. I find that you can find a lot of negative stories out there, right, about why this doesn't work. And I just, you know, it didn't take me long to go and pull out a bunch of articles that said, you know, you got to be careful. You know, hey, here, day trading, you know, day traders are dumber than ever. Why is it so hard to make money? 90% of day traders lose money. And these numbers are all over the place, right? And it is very true. 90% of people who attempt to day trade will lose money in their first couple of years. And in fact, this is a good study, a scientific study they did here, where they were able to show that 80% of day traders quit within the first 2 years, and after 5 years, only 7% remain. So 93% are not there after 5 years. So obviously, have not successfully made it a career for whatever reason. And there's a lot of reasons for that, and we'll talk about that in a second. One of my favorite articles was this one, right? This was an article, and they come from reputable sources, right? From Forbes, and this is from I think it was from the Wall Street Journal. 8 reasons why you should never become a day trader. The dream is a lie. So, it's tough when you're bombarded with all this information that you're going to fail and that the failure rate is so high. And it is true, but there are reasons for that. And why are there so many obstacles, right? Why do so many people fail? Well, I believe that there's a bunch of things that commit to it. There are predatory practices out there that you really have to worry about. You have to worry about, there are people with poor discipline that just never really set up rules that they're going to follow, and they never get into that mature professional mindset that you have to get into to be successful. Could be a lack of commitment, right? I'm just going to try it out, and if it works, great. If it doesn't, I'm out. And they're just in to leave. Underfunding is a big issue too, right? There's a lot of people that will say they do these small account challenges, and we'll start with small accounts. It is absolutely possible to be successful and make money with a small account, but it's usually not as easy as is portrayed when people use these small account challenges. You have to remember, anybody doing a small account challenge and posting that on YouTube probably has a lot of trading experience and has already been very successful with a large account, building a larger account. So if you take all of that experience and pour it into a very small account, you bet you can take $1,000 and turn it into $100,000 over a year. But again, that's a professional who's going to do that with their experience. So just, you need to start with enough money where you can trade and follow a mature, disciplined approach without having to worry about running out of money on every loss, because that makes you, trade with scared money, and scared money has a larger probability of losing. A lot of misinformation, right, out there as to what is good trading, what works, what doesn't, what should you do and what shouldn't you do. And a lot of that information, unfortunately, comes from the predatory practices. I mean, these are very, very related, right? You can't trust a lot of the information that's out there because there are so many people trying to sell you stuff. And some of it's good, right? Not all of it's bad. There is great stuff to buy out there. There's great, rooms to be in. There's great training classes. That stuff is valuable. There's also a lot of stuff that is just overpriced and not very valuable that they're selling because they can, and people are desperate to get that information, and there's a market for it. And if there's a market, somebody's going to sell into it. The wrong motivations happen a lot, right? So people will have the motivations that are not related to the success factors that will help them in day trading. The key one, and the one you will hear all the time, is I want to get rich, right? I mean, it's not, why wouldn't you, right? We're day trading to make money on a daily basis. But if your sole motivation is to get rich, it's actually harder to get rich when you're focused on the money, right? If you listen to some of the most successful people talk about it, there's all these things they say about do something you love and you'll never work a day in your life, or focus on your passion and the money will just happen. A lot of that stuff is true, but it's hard, right? When you're saying, but I mean, I'm only here to make money, right? If I had $1 billion, I'd be on a beach somewhere or doing something else. I'd probably not be sitting in front of the terminal. But you have to acknowledge, though, that if you want to be successful in any discipline, you can't directly do it for the money. You know that the indirect benefit is going to be the money, but the thing you need to focus on is your performance at that activity. Day trading is no different in that way than many other things, right? We used the other day in the room an example of a doctor. A doctor doesn't go in to say, I'm going to make $10,000 off this operation. The doctor's got to go in and saying, I'm going to have a successful operation. I'm going to save the patient. I'm going to cure the illness. Whatever. Like, that's got to be their motivation in what they're performing, knowing that the outcome is, the more effectively I do this, more times, the more money I'm going to make and the better doctor I'll be. But that's the offshoot. An athlete is the same thing. Right? They can't focus on the money directly. They got to focus on their performance in the field, knowing that they'll be rewarded for that downstream. For us as day traders, you need to focus on your ability to maturely implement a plan and follow that plan, and the money will follow. And that's really important when you start getting into setting up your strategy and how you're going to follow it, because people sometimes get stuck on the, am I making money today or yesterday? Am I making or losing money after I count commissions out? All of that is superfluous to the core psychological need you need to focus on, which is the making a good trade and following my rules consistently. And the last I'll list here is poor training. So, there's a lot of training materials out there that you can pay for, and frankly, a lot of it is not very good. It's very basic, or they do the hook thing, right? You'll go into a training and they'll give you the first, little bit of information that can get you into trouble. So you know enough to get yourself into trouble, but not get out of trouble. And then they'll sell you the $1,000 or $5,000 or $10,000 course, whatever it may cost, to get you back out of trouble. So you got to be careful about those, that training that's out there, and make sure it's the right training for you. Now, in saying that, there are some great training packages out there, and some of them are very expensive. But it's hard to find them, and I end up sort of building my own training package that I self-trained, but that means it takes a long time. So that's the last thing that I don't have listed here, but I'll mention. One of the key obstacles is the expectation, and it comes into this misinformation, right, and the predatory practices where buy my package for a couple of $1,000, and I will make you a millionaire. You too can have the Lamborghini like I do and the big house in the hills, or whatever they're pitching at you. Trading is a skill like anything else, and you have to build it over time. My personal story, which I'll talk about in a second, I'm on a multi-year plan for success, knowing that it was going to take me a couple of years, because all of my research showed me that the successful people who really have been day trading for more than 5 years, they said that it took them at least 2 years to become consistently profitable, and up to about 3 years before they even started getting close to their profitability targets. So they might have been consistently profitable, but at a lower level than they expected, and they had to build up to the point where they could actually make the amount of money they wanted or needed to. So I think that's important to understand, because we all want to get rich as quick as we can, right? It makes sense. But if you look at how long does it take to build the right skill, right? They say that, that 10 or 20,000 hours is the minimum you need. Well, start doing the math, right? If I divide 10,000 hours by 6.5 hours a day, and the market is the max I could take if I watch the markets every hour that it's open, 5 days a week, like that's a few years worth of market observation and experience before you get to the point where you're going to be truly, skilled at trading. So expect that it's going to take longer than you may think starting out, and you have to be able to plan for that. If you can't, then you may need to reconsider whether the trading is the right thing or whether you do it differently. I would never dissuade anybody from trading. I think it's a great activity, but maybe you need to fit it into your life differently. Maybe you don't day trade because you've got to work a day job. You swing trade where you can do it off hours, or you take longer term investment-based trades, like long-term swing trades. Like, there are many ways to be successful in the market. All require different skills, tools, and discipline. At the end of the day, though, all of this stuff, that misinformation you have to manage, and it really comes down to what's between your ears, right? Are you managing your psychology effectively such that you can implement your rules and really sort of get on top of this game? And again, I come back to all the analogies. I've read a lot of sports journals and bios of athletes, and when you read those, often they say it's the mental game that was the toughest to win, right? They might have been extremely skilled, but they didn't have the mental stamina to play on a team, or to deal with the big leagues, or the pressure of like all of that stuff. There's a lot more to manage than just your actual performance in any field of activity, and trading is like that too. Right? Like, I talk a lot about the difference between simulation, so sim account, and a real account. And, people can be wildly successful in their sim account and then go live and start to lose money immediately and can't figure out what changed. I mean, but something does change, right? The pressure of putting real money on the line, the difference between, and nothing changed physically. Your tools are the same, your setup would be the same. Sim accounts are great these days where they directly reflect what's happening in the market. Nothing really changes in the environment, but what changes is between your ears and how you mentally deal with it. So what I'm going to do is I'm going to talk to you now about how I've created my rules. I'm going to share with you just some of my rules so you can see how I set them up. Because when I started trading, if I go back to those things we were talking about earlier, right? And let me just go back to a different slide here. And remember these that I talked about? I spent a lot of time focused on the analysis and the platform and making sure I got that right. And I thought, once I've got this set, I'll be good to go. Because I'll have a good strategy and a set of rules I can follow. I'll put my risk management in place. I'll understand how to do technical analysis, with the best of them. I've got the best platform and tools that I've paid for. I'm ready to go. I've got everything I need. And I realized, not so quickly, unfortunately, I lost a bunch of money. And then I realized this is the part I was missing. I was really missing putting the psychology in place to make myself mentally successful and tough enough to withstand the ups and downs of this game and really achieve the success that I was looking for. So what I've done is I started with a set of rules that were very technical, that were really based on when you see this pattern, do this. When you see this setup, do that. And we talk a lot about, you'll read a lot of books about that, right? ABCD setups, reversals, opening range breakups or breakdowns, VWAP reversals, there's all sorts of double tops, double bottoms, head and shoulders. There's all sorts of technical patterns that you need to get to understand and know whether you use them or not. I also think you should understand the tools in your platform, right? Bollinger Bands and stochastics, and there's a lot of stuff out there that you use. But I've boiled it down to simple things that I use from a technical indicator, and most of my rules now are all psychology based, because those are the things I need the most reminder of, and the most that I really sort of need to focus on in my trading, because I've got the technicals down and I found that was a good base, but it wasn't enough for success. So I'm not going to read these to you, but and I'm sharing openly, sort of these are my notes, right? So things like, I notice I've got, I want to be right all the time. So if I miss a move by 5 or 10 cents, I don't enter it. Instead of saying, is it still a good move? Maybe I should enter it now, and I can take it. So these reminders, but it's not about being right. Put aside your pride. Don't worry about the perfect entry, right? Do you really care if a stock moves $2 and you only get $1 of it? Should that matter to you? I found that I was not doing the whole thing because I didn't get in and I didn't get the whole $2. And that was foolish, because as long as I'm making money and I'm making a smart trade following my rules, I shouldn't really care. The trend is your friend. Use the trend. This is the page I'd started with. So I still have it in there, but I've actually reduced a lot of the technical things. So again, we'll record this and you'll be able to go back and review it. So I won't read through, but there's things I look for, right? But here's what I follow through on a trade. This is the process I mentally go through on every trade. Assess the risk. Determine your trade size. Don't panic. Be rational about what you're doing, right? Avoid low float. This is stuff that works for me because I know what I'm good at and what I'm not good at right now. So I start, going through this mental checklist on every trade. So what am I looking for? Is this an opening range? Is it a VWAP breakthrough? Is it a bull or bear flag, right? So what's the pattern? What does it look like? And do I understand the risk I would have to take to be able to execute successfully on the pattern? Then I reassess, as the trade's going on. Every minute you got to look at it and say, has the trend changed? Is it doing what I expect? What do I need to do differently? And then I've got rules that I sell. So here's the rules I should follow when I sell on a stock. So this just gives me sort of the framework on which I can take a trade. You notice I haven't specifically gone into exactly when the moving averages cross and do this and that, because I had all of that in my rules, and I found when I reviewed it, it was adding complication that I've been doing this long enough that I know that stuff. So I've taken it out of my rules because it's not the important stuff I need to remind myself of. If you're starting, I would suggest you should have that front and center. Understand it. Make sure you can identify it without even thinking. I see it. I've got it. I know what it does. So I've got a question in the room. How do you differentiate between the trend is your friend and chasing the trend? It's a great question, and it's a tough one to answer. What I would say is when you technically assess the trade and you can still get a good risk reward out of the trade using technical levels, then you're not yet chasing it, right? So when you're chasing a trade, it's when you say, look, I think the thing might have already moved 3/4 of the way through the move and I've only got a quarter left. So that means your risk to reward would be your risk would be 3 times as great as your reward. Generally, it would be easier to show you in a chart. Maybe we'll do that at the end. I can show you in a chart. But really, I think it comes down to the technical rules, right? Because sometimes you don't know if a trend is going to go for 10 cents or $10 on some trades. But the important thing for me has been doing that technical analysis on it. So yes, it's already been trending for a while, but can I still get a good risk reward? If I can, then it's probably a good trade, and the trend will then support it. If it's moved so far and there's no natural technical pullback where I can get a good risk reward, then I won't enter the trade, even if the trend is really strong. So hopefully, that makes sense and gives you an idea, because sometimes it just moves so fast and so far that the only technical level you can put is so far down that you just possibly can't mitigate that risk. The key thing is don't create a stop that has no technical bearing, because that's a sure way to get stopped out, because it might just be a pullback and it bounces past your stop like, oh, I'm out. When it was a beautiful trend and it was going in the right direction, but because your level had no technical logic to it, if you will, then it's just going to get in your way. All right. So we have another question about how do you differentiate between a pullback and a reversal. So again, I'll use part of the same answer, that you don't know when it starts. Okay, so when any move starts and it starts to pull back, there's no way to tell whether it's just a short-term pullback or a reversal. That's the toughest thing. The key thing, though, again, is use those technical levels to say, if it's a pullback, how far will it pull back to? Where will it most likely and most logically stop? So let's do this. I'm going to just pull up a random chart. We were watching Apple today, so let's use Apple and say, let's look at, okay, so let's look at Apple in this time frame right here. So to your question, how do you know if it's a pullback or if it's a reversal? So let's look at this time frame, right in here. So let's say you're trading this and it's coming down. You say, geez, I missed the trade. I'd like to enter the trade. And then it starts to bounce. So in time, if you were right here, let's say if you're right here, so do I know if this is a pullback or if this is a reversal? So if you're looking at the trade right here and say, well, geez, I think I'd still like to take it to the short side, but I don't know whether it's going to pull back or reverse on me. So what would you have to look at? Well, there's a couple of things, right? So one, you'd say, okay, so I've got a moving average here and a moving average up here. I see that it's broken. This is a 20, by the way. The green line is a 20 moving. I see it's broken the 20 here and here, so it's likely to break the 20 again. Remember, we're at this point in time, so we don't know any of this information yet. So let me just, this is our timeline for assessment, right? So we're sitting right here. So I would look and say, so it's broken the 20 here and here, so it may break the 20 again, but that doesn't mean it's gone through, but it's never broken the 50. So I could use the 50 as a stop loss, and the 50 happens to be just above the last time it had a little pullback here. And notice that last little pullback is almost at the same level as this point where it stopped. So I've got a couple of points of corroboration close to each other, right? So this actually is closer to where the 50 crosses. My point is, within this range, I would say if it goes past this point, then it's actually a reversal. If it only goes to this point and starts to pull back down, then it's probably just a pullback. So I would be waiting, if I was to go short in this, to say, again, so if I'm at this point in time, I'd wait. I see it reverse right here. This is probably the point at which you could enter and say, all right, so it was probably just a pullback because it didn't break this level. It didn't break through this range that I had set, and I'm good. And you could take a short and you can ride out the rest of the trend, right? The trend is your friend. If you were already short way up here, I would use the same logic to put a stop loss. So you get down here, it starts to pull back. You're like, oh, do I exit the trade or do I take a partial? Well, I do the same assessment. I see it's broken here and here. So again, you put your, I'd put a partial or your stop loss up here, and then it didn't hit that. So good, I get to keep my shares and I get to ride out the rest of the trend. All right, so that's sort of how I would assess whether it's a pullback or a reversal. Again, when it starts here, I have no idea at this point. I have no idea at this point. I don't even know up here at the top, really, right? I only know once it reverses and starts to continue that trend. And again, there's still no guarantee, right? Notice it got here and then it did a little bounce. So if I entered here, I'm getting nervous at this point, right? Because this is coming back close to my break even. But sure enough, right, it bounced off the 20 moving average and went down again. So hopefully that's not too long-winded, but that's how I, assess things technically to figure out, is it a pullback or is it likely a reversal? Okay, so also in my rules, in my information, I have things that I've learned over time that I've added to this, key lessons, right? I've had trouble analysis paralysis, so pull the trigger is important to me, right? Take the darn trade is is one of the rules that you saw on my monitors. So, I also track trades that I don't take. So most of them will be winners. I just remind myself, take them, right? So, there's all these little things that I use as just reminders of things that I have to keep in my head that are good things to help me with my trading. You notice they're not real technical oriented. They're really based on psychology. Last but not least, I've got a list of secondary, I'll call strategies that I keep that, again, just a reminder for things that I sometimes watch. So I've got a strategy or an approach I will take with pre-market gappers. I don't trade them very often, but if I do, I've got a set of rules that I've built for myself to say, here's what it needs to look like for me to consider the trade. Right? If I am going to trade a low float, like I mentioned to you earlier, I don't like low floats. I'm not that good at them, but I've got some rules. So they have to be, gapping over 200%. Here's some rules that I follow, that I look for. So it's got to look like this before I will do anything. IPOs are dangerous to trade because they can go shoot up after the IPO or they can fail miserably. So here's things that I look for if it's an IPO. So I'm showing all this to say these are rules and strategies that I put in place that help me manage my trading much more effectively than just the technical trading elements that I have. So I will record this, and you can go back and look at these charts for as long as you want. Also, for anybody as a member of the room, I have these posted, and I will give you a link where you can go and actually pull these slides. In fact, let me just take a moment, and I'm going to give that to you right now. So, so you can pull my journal template and use it if you want. I'm very happy to share that again with members of the room, so that you can. Why is this not coming up here? Hold on a sec. There we go. There you go. So there's a shareable link that you can look at. And that'll allow you to just look at the charts directly anytime you want. Okay, last, these are, again, reminders for myself, what I call the psychological realities of trading that I have in here. So this is stuff that I've taken from books, a lot of Mark Douglas you'll see in here, and things like that, right? That on any individual trade, I have no idea what it's going to do. I'd like to think it's going to go my way, and I'd like to think that is going to be a successful trade, but I don't actually know because I'm playing probabilities. So don't get upset if the trade goes against you, right? You stick to your stop loss, you exit the trade, and you move on to the next one. I need a reminder of that because we can all take very personal when a trade fails, right? And it fails and you're like, geez, that didn't work. Why didn't that work? It should have worked. Well, maybe it should have. But you know what? It doesn't always. If it always worked, right, you'd be easily a billionaire, and we could all retire. So just use that as a reminder. Things that affect me. I know if I've got meetings scheduled, I generally achieve poor results. So be cautious. And then I remind myself, how bad do I want this? It's interesting. I just use that as a little self-talking, if you will, a little self-talk. So I see in the room that people are having difficulty accessing the file. I should have it on share, but if I don't, I will go look at that a little bit later and make sure that I get it to you. But you should be able to, anyone who has the link can view. Should be, anybody who has the link can view. So Yeah. All right. Well, I'll look at the permission settings later because it should be set up properly. But anyways, we'll come back to that. So in my journal, and I'm sharing you a day of, so I've got a template. Let me just show you. So I've got this template that I use every single day that I fill out, right? So I've got 2 pages essentially. I've got a cover page for the day, and then I've got a page where I put every single stock that I trade. And let me show you in real time. So remember Monday, I showed you on my sheet that I was trading small volumes on Monday. So Monday, I set this up in the morning. These 2 boxes here, I set up and look at in the morning. So how am I feeling, right? What are today's targets? So I decided I was going to take a $20 risk per trade, a daily stop loss of $200, and I had a $300 target. This is the least important number here, and I don't really follow it. I just trade until I'm don't feel like trading anymore. And this is in PowerPoint that I'm looking at. My targets are set. You notice it's very generous. When I trade really, really low dollar volume per trade, I tend to give myself a fairly generous stop loss. So I could take 10 trades, 10 more trades that fail than succeed in any given day. And it gives me room to make trades. Now you notice I don't take anywhere near that number of trades. This day I only took a couple of trades. So I know I don't even have to worry or look at my P&L. I'm comfortable with the $200 loss. I can do that in a day. I don't worry about it. I don't even think about the money. And it allows me to take trades sort of freely throughout the day. Now, I only worked half a day here, but anyway, but that's how I look at the market and information. I look at my mental state, and then at the end of the day, I put in how effective I was. You can say here, I was okay in the morning, but I need to stay focused. So I put notes at the end of the day then, right? Just notes to remind myself, what was it like? What was I feeling? How did I perform? What do I need to do differently? Here, this is actually not profitable versus non-profitable trades. This was how many did I follow my rules out of the total trade. So here I only felt I followed my rules out of 3 out of 4 trades. So I want to see that 4 out of 4 or 100% every day. If not, then I've got work to do. And over here, I track sometimes trades that I balk on, right? That I just don't take. So here's a few trades that, frankly, I should have taken. Would have added nicely to my total for the day. I just tracked it to say, okay, so there's nothing wrong technically with these trades. I should have taken them. I just hesitated and lost the opportunity. So, and you can see there's small dollar amounts because usually, like these obviously are ones that I got stopped out on. I've got more detail on my paper sheet, but I just wanted to give you a feel for what it looks like. So if we look at a given trade, here's how I track it. I put a 5-minute chart for the full day and a 1-minute for the area in which I was trading. And I put down, so what was the risk I was taking on that trade? So I was taking a $1 risk, which means that I was only taking 20 shares. So if $20 risk, right, per trade, and if it's $1 risk per, if the dollar is what I was risking. So here was my original entry. I felt I had to take $1 because that went up to the high of the day. So here was my dollar risk, which means that I could only take 20 shares. So I took that, and then what happened is it bounced up against me, and I decided to add to the trade. So I decided to increase my risk to $40 because I'm now double size. It came down. I sold some partials, right? It bounced back. So there was a question earlier about how do you know if it's a reversal versus a pullback. So at this point, I noticed it didn't break the 9 moving average. I decided it was just a pullback. I added some size. I only added 5 shares. That's how I got to 45. All right, it pulled back down. I took a partial, and then I exited all out here. So, you can just see. So here's the notes I take. How was my entry? How was my exit? Right? What should I do differently for next time? These are just all the notes that I put. And then, I like to point out things where I really should have considered other actions on the trade. That's how I keep my journal. It takes a fair amount of time. And on a day when I trade 2 or 3 stocks, I can get it done in, I don't know, 15 minutes. 10, 15 minutes. On a day where I trade 8 or 9 or 10 stocks, it can sometimes take me an hour and a half or more. But I consider it a worthwhile investment because it really allows me to really keep a thorough journal, understand what I'm doing, and then I can review that on the weekend about how effective I was throughout the week and what I need to do differently for the next week. So, question in the room from SB, do I recall why I didn't enter at VWAP? So this is, this was just fear-based, really, right? Like, I looked at this. This is one of the things I have to manage when I'm in a trade. right? This would have been a great entry point. It bounced off of VWAP. It didn't break it. I could have re-entered somewhere around this and then taken it for this nice rundown. And then it exhibited the same pattern here where it didn't even break. So I pointed this out, and really, you know, that's just psychology for me. I took one good trade. I was afraid of losing the meager $29 that I made at it, and I didn't want to enter another trade. So, you know, technically, that's why I pointed out to myself so that I remember these things that say, look, you know, next time, why wouldn't you? Right? So anyways, we all have different challenges. A lot of people deal with overtrading, and overtrading where you just start entering trades willy-nilly and you're not really assessing. I have the opposite problem where I undertrade because I analyze too much. I get into analysis paralysis. So so we all have to figure out what the things are that push our buttons and that we need to manage from our psychology. So there's a question in the room about, can you talk about holding a winner? And absolutely, because we've had a lot of talk about that. So I generally have a different philosophy on holding a winner at the open versus holding a winner later in the day. And let me explain that. So this was an open trade. So if you look at this, on an open trade, I expect things to oscillate and the trend may reverse. You may have heard us talk about in the room that at 10:30, right, at 10:30 every day, is like the big reversal point, right? Trends tend to reverse, stocks tend to go in the opposite direction. So any established trend that happens in the first hour, right? So if I just sort of go here, so the first hour of the day can often reverse at 10:30 and take the stock in a different direction. It happens very often, so I'm aware of that. So any trade I tend to take in the first hour, I'll consider it more of a scalp trade, and I won't generally hold a winner for a really long time. Unless it's really, really trending in a direction. So in the case of this trade, right, you notice I took my partials and I exited for two reasons here. One, it's before 10:30, and I just didn't want to give back my gains to get to VWAP. But then the smart thing, as per the earlier question, would have been I should have re-entered, right? I booked my profits. I should have re-entered when I hit VWAP. That was my failing on this. Also, I had very small size, right? I only had 5 shares at this point, so it's really not worth holding. If I was doing a bigger size, I might have considered holding all the way up to my break even, which would have been up here somewhere. I would have never hit, right? My break even, if you look at the 5-minute, was way up here. I could have easily held all day, but I didn't. Now, if I'd entered a trade later in the day, so after the 10:30 mark, right, anytime after here, I like to hold a partial size. I almost always hold a partial size for break even. So what I'll do, let's pretend that I entered a trade right here at this point. So I'd probably be taking a partial here, right, somewhere around here, because there was a little bit of a pullback. You know, oh, it breaks the 20 moving average. I might take a second partial here, and then, you know, I don't know, for argument's sake, let's just say I take a third partial here. Usually after my third partial, right, so this would be partial 1, 2, and 3. So I exit a trade. So if I have 100% of my size here, I sell 50% here. I then would sell 25% here, and I basically sell 12.5% here, right? Or I sell, you know, I always sell a half, basically. So I divide everything in a half, right? So by this point, I'd be sitting on 1/8 of my original size. I always keep that 1/8 size where it's always for break even or new lows of the day. And I do not consider that last 1/8 of my size as part of my earnings. So usually what I do is that's when I put an automatic stop loss. I like to use range orders. So I'd put a range order in. I'm running out of screen real estate here, but I put a range order in and I just let it sit. And that way I don't think about it. That way I can take advantage of a big decline. And this is a good example, right? So if we look at Apple right here, so let's say I entered here. I never would have got to my stop out, but I never would have made big money either, right? Because the thing was just sort of oscillating through the day. And I would have just held on sometime before 6 o'clock or 4 o'clock, sorry, down here. I probably would have sold and it would have been great. I would have been close to the low of the day. It would have been a good trade. Some days though, you know, I could hold and then the thing would spike back up to my break even, and though I've held all day, I just lost that money and I'm out of the trade. I didn't make anything. That, you know, I think you just have to steel yourself that last 1/8 or maybe 1/16 of a size, right? If you're partialing out, don't even consider it in your P&L and just hold. Because I've found, I've done the numbers on my trading. It's slightly better than break even that, if I just hold on to that last bit of size, you can sometimes get a great run. Like this could have also broken to the downside, right? And it could have made a ton of money. Like look where Apple is now, right? Today was trading at 172, I think, or something like that. So, that's down $13 from where it was on just on Monday. So, I'm not suggesting holding overnight, but I'm just saying the possibility was there for it to have broken down. So it could go either way on you. So the best way to hold a winner, I think, is just don't include that last share size in your P&L. Try and just hold on to it. Now, to what Aaron's asking in the room, why not swing it? You could absolutely swing a size and hold it if you're a swing trader. Again, I don't do it for psychological reasons. So I do not want to wake up in a cold sweat in the middle of the night going, oh my God, what if Apple gaps up $10 tomorrow? Right? Like I just don't want that worry. What if overnight, they had massive sales in China and the stock is going to go through the roof? Like I just don't need that hassle. But if you're a swing trader and this would have been this looks like a great day to have swung it, right? Because it was down all day. If you entered at this point somewhere here, right, in the last hour of the day before the close, you probably would have opened lower the next day, and it's a great swing trade. But I personally just don't swing trade at this point because I just don't want. I want to go to sleep easy. My money's cash. I start again tomorrow. But that's the only reason. There's no technical reason why I don't or wouldn't swing trade something like that.
Well, thanks everyone for listening to this training podcast. I hope you got value through it. There were a lot more questions when we did it live. Had to cut them off as there was some quality issues with the video and the audio, and you may have noticed in this it became out of sync a little bit at the end. So apologize for that, but hope you got value out of what you saw, and we look forward to trading with you in the Bear Bulls trading room. Take care.